Hi, family. This is Dr. Willie Green, aka Dr. Financial Literacy. Thank you very much for stopping by. As a disclaimer, I am an experimental political economist. I'm not a financial advisor, CPA, nor an attorney. So today we'll be looking at your basic budget, looking at a budget monthly in terms of the cost that we're trying to get down with the debit and also the average daily balance and how it is used when you put in deposits within an account within the velocity banking. The whole objective is to help you to better understand your financial resources or your financial capability so that you can help your family, friends, and your community. So let's go ahead and get started. First thing we'll get started looking at is the budget, and I've covered it in previous videos, but just wanted to just look at it one more time. So here we have the basic budget that I started with. There are four particular areas. The first area is the income, and this is my wages. What I'm using also from cash advance from Navy Federal to complete this project. And I'm also including cash rewards. So on your credit card, you're receiving cash rewards from. I transfer them into one account. Use that also for velocity banking in general. We have a housing section, and we have another section for just general expenses, car, insurance, gas, fuel, parking, all of my credit cards that I'm responsible for, business and personal. Some of the cards have a balance of maybe $2,000, but they're asking for as low as $21 to pay back. If I pay back the minimum on some of these cards, it approximately take me 20 some years, if not more, to pay them back. So that area is like $2,431.35. That is the largest area of my budget. And then there's a daily living section, which includes newspaper, internet connection, some of these other things, Zoom communication, postal service. So the four major areas I have is the income section, also the daily living section, monthly expenses that really go into the credit report, and housing, the utilities, water, light, gas, and things of that nature. So just wanted to do a refresher on just the general budget items in general. All right, let's go over to what we're looking at today. In today's, we're going to look at amortization schedule. Particularly, one of the things that I've been trying to do is move away from looking at my financial resources from the perspective of yearly and monthly, and really think about daily. How much the interest is being charged daily on the things that I have in my credit cards, my student loans, mortgages, everything that I have that's receiving interest. I'm really starting to think about it daily. In the previous videos, I calculated or showed you how to calculate the average daily balance, and that is also calculated today in column E. So in looking at this, one of the credit cards that I'm looking to tackle this month, because I think I did really well last month with my first experiment with velocity banking, improving my credit and improving my numbers. I wanted to get started immediately. From that first loan that I took out, for that first cash advance that I took out from Navy Federal, we're still in the statement date and it doesn't end until 12. I paid it back, didn't have any interest, but I took out another one and using it in February. So I may pay a little small interest, or maybe the cycle starts over again. But I think I did well with it, brought down a lot of my personal debt. So I really went on to the business debt. And I really encourage you to look at velocity banking and how it could possibly improve your credit score, improve your credit rating, and your overall credit profile. It has worked for me, and every day I've been trying to show you the information and the data. So in looking at this card right here, this is my Wells Fargo card. and the current balance is $6,553.03. That's what I owe on it this particular month. And I wanted to use velocity banking on it. So that means I'm going to put in my checks. I'm going to put in that cash advance that I got from Navy Federal, those extra income that I'm getting from the taxes. So from this first chart that we have here in general, this is me on a 12, this is me if I did it for 12 months up until 2025 every month. This particular month, we're in the month of February, but I'm looking at, okay, what if I do the velocity banking or just do not do the velocity banking and just paid this credit card off? The minimum is generally about $200, $200 a month. So if I really, in general, then this would be the payment of the card. And as you see, the interest will be constantly going up because it's being calculated on an average daily balance. So starting February the 1st, I started using the card for velocity banking with a balance of $6,553.03. I've made no deposits for the month, or I don't, if I didn't anticipate doing no deposits. That's this example right here. And each day it goes up about $4.85. Now I came up with $4.85 by using a calculator to calculate the entire interest for the year. And I think that was maybe $900. Then I divided that by 12, and then I did it by a daily rate and a monthly rate. And a monthly rate came out to be about $4.85 in general. Now it's not going to come down because we're not making any payments on it. So if I go to an entire month making no payments, waiting for me to get my bill, then I'm going to end up paying $135 in interest alone. And then they usually tack on $25 as the minimum payment. But if I do nothing to this today without any velocity banking attempt, I'm going to end up paying $135.80. Now, looking at velocity banking on the second column, now you can do this in general by just paying extra at the end of the month, but velocity banking, using someone else's money to bring down your average daily balance and reduce the interest, is predicated on the daily balance being brought down, not waiting to the end of the month and then I add an extra $100. It's predicated on every day, if I can, or how often, bringing down that average daily balance. Now, in this second example with the color coding, you see that I will be starting with the same balance. For this particular month, I went back to Navy Federal, got another $1,860. I put that onto the card, and then that made me have a new balance of $46.9303. I'm also paying the interest, but I do not have any monthly expenses. And that ending balance for that particular day was $4,697.88. Now, if I didn't put anything toward it, it would have ended up the same with an additional about $5 in the interest. But because I had that Navy Federal cash advance, that helped me to bring down the balance significantly. So for the next few days, I'm going to end up with a much lower balance than if I would not have done anything at all. And that's an option. Again, like in the first example, you don't have to do anything at all. Just maintain a payment at the end and just pay extra. But I'm trying to use velocity banking and the principles of doing something extra every day, every other day, but trying to hit that daily balance. Now you can see on the 8th is when my paycheck starts to come in. Now, $129.76, that's where I made a change in my federal taxes. I went to my employer and said that I'd like to get back more at the beginning of the year versus waiting to the end. And I'm taking that $129.76 extra and using it within Velocity Banking. And I'm going to try to keep track of how much I potentially save. The second, on the 9th, I get a part of my paycheck because I have a direct deposit to two banks. One bank gets $12.80, the other banks get $400. And like I said last year, before, I'm gonna probably combine these two because I can get my money earlier with the $12.80, and then it can reduce the principal balance on a daily basis. If not, combine it, then get a higher amount going to the bank with $12.80. So that was half paycheck and half paycheck. And again, it's come down from the principal, but you can see in the monthly expense column, I have not produced any expenses at all. So with the Velocity Banking, you want to take or have as much money as you can on the debt instrument in general, and then be able to use it whenever possible. Now, could be a challenge in the sense that if you put your whole check on the credit card and you need to get something out, then yeah, you may have to incur a cash advance fee. But I'm gonna try. I'm in the process right now of setting up and linking my checking account with the credit card, so that I wouldn't necessarily have to put everything in and money can come out. So there's going to be more on that. I did successfully do it with one bank, and I'm going to try to do it with this other bank here, and then I'll have more ability to move money around and have access to it. Okay. I get paid again on the 23rd. This time you're not going to see this here 129.76 because it's a monthly amount that I'm getting between the first paycheck and the second paycheck. That change that I made. So I'm getting $12.80 from one bank, $400 from another bank, and that brings down the average daily balance to like under $2,000. Now it's going to go back up because I have not paid any expenses. That's the next thing that we're getting to, which is here. I'm trying to pay $16.50 for the rent for housing, which includes all the utilities, the water, gas. So one section is called the housing expenses, and the other section, I think I'm gonna just call it credit reporting expenses, because these are mainly the expenses that are on my credit report, but maybe I'll come up with a better name. And then there's those daily expenses, gas. I may run to the grocery store, may buy a little something to eat. So these are the three major categories. So from the budget last month that I worked on, I'm putting together the expenses that was in January, and then have those same or similar expectations in February. So I'm kind of pre-planning in general. So $16.50 for housing expenses, $24.31 for credit reporting, the car, the automobiles, all the cars, credit cards, and some other things, and $5.05 for daily expenses in general. So they're going to make the average daily balance go back up. And as you can see, it increased to $29.70. Then I paid the credit reporting expenses, that was $54.06. Then I paid the daily expenses, or will be paying the daily expenses, that's $5.09. So when you add, you're taking away from the daily balance, as we see in the deposit category. And as you subtract That's coming out of the expense categories. But one of the great things is that it's reducing your daily balance on every day in which the banks calculate. And that's what I'm starting to think about all the time. My average daily balance, not the 30-year mortgage, not the 12 years or 15 years left on the mortgage. How many days will I be charged and daily interest rate? And what can I do? I don't have a home equity line of credit. I do not have a PLOC, personal line of credit. The thing that I have at my disposal is one credit card with a zero balance that I could get cash advance from, and there's other cards that I could use. So using this cash advance strategy is one way of reducing my debt and increasing my credit score and income to try to get to a personal line of credit or a HELOC. All right. So one of the things that I found out today that I did over the weekend, I read on the internet about a loan pledge, certificate loan pledge with Navy Federal. Did a little research on the internet, see how it operated. And I was thought, now this is kind of good idea. So I took some money, put it into my checking account and savings account, and then I went back online and then applied for a certificate. They pulled the $4,000 that I put into the account, and they created a loan for me. Today I got the call that I was approved for a certificate pledge, I think, with Navy Federal with a $4,000 limit in it. That's eventually going to be placed on my credit report, and it's at a 2% interest. Now, I could have just taken that money and paid down some debt, but I'm trying to build a relationship, more of a relationship with Navy Federal and other institutions. So I decided to take out the loan, and at 2%, it's still going to be better than some of the loans I have out now. And I just take that, pay down the debt, and may hold it for a year or two. But I'm hoping that's another strategy that would help me improve my credit so that I can get a PLOC or I can get a HELOC. And particularly, I'm looking at an all-in-one mortgage to replace all three of my mortgages and save so much money. So I really encourage you, please, to just look at your money and your debts. If you have any questions, you can give me a call or shoot me an email. I love to have be able to chance to work with you and help you to reduce your debt. You can reach me at the number in the description, or you can shoot me an email. But yeah, this journey of using velocity banking to improve my credit, improve my rating so that I can get a HELOC or a all-in-one mortgage or a PLOC has been tremendous, considering the debt that I'm carrying, which is approximately $312,000. But it seems to be coming down. I really like where I'm at. I really like sharing this journey with you, and I hope you continue to follow. And please, if you have any questions, any comments, please drop me a line. Thank you very much for your time and appreciate you really stopping by. Bye-bye.